You can't have one shoe fit all kind of a strategy. None of the Asian countries has gone for the deposit, guarantee. It's only in Europe that they have gone it. So just imitate because it has been done in Europe, I don't think that is a very wise thing. But you examine the situation domestically, and if there are valid reasons, then you should take the decision. But I don't know all the facts, so I cannot tell you.
But I think, Dr. Saab, if I may add here, that in Pakistan, the few banking failures that we've had in the past, effectively, none of the deposit holder actually lost in the formal banking sector.
Nobody.
Whether it was Mehran banks or Prudential Bank, so the past is, if that is an indicator, obviously, and that is primarily, I think, government and this central bank in the past acted primarily to ensure confidence in the system. Right. So I don't think that is going to change as far as Pakistan is concerned. And that is the reason. In US, actually, there is this FDIC, Federal Deposit Insurance Corporation, and I think that provides insurance to certain level of deposits. And I've seen that the chairman of that FDIC, this lady, she has requested for enhancing the reserves. I think they have about $60–70 billion, and expected losses may be, very large. And they're saying that about 200 or 300 banks, I don't know what exactly is the number, may be, insolvent or undercapitalized. So in view of that, they're talking about it. But in Pakistan, effectively deposits are insured, I would say.
There is a liquidity in the market, and the central bank will inject whenever it's needed. So why do you need that?
Masood Naqvi Saab? I think we'll put forward this, Dr. Saab, we have formed a committee here at the Institute on the economic side, macroeconomic, and we will, based on, the recommendations that we generate from these discussions, we are going to forward these recommendations to the government. And I think definitely this will be one of the recommendations that should go. So, Shabar Zaidi.
And secondly, we don't have any Pakistani banking crisis at the moment. It was more of a rumor than a reality.
Right.
That's what I want to you to reiterate this position, because people are confused on this matter. Because when we talk, people think that when we say financial meltdown, it also affects Pakistan. No. Let us reiterate that this has nothing to do with us.
I have explained to people that I was not the governor in 1997 when the Asian financial crisis. So I'm being absolutely objective. In 1997, Indonesia lost 13% of its GDP because of that financial crisis, a very heavy price. The poverty doubled in Indonesia, and there was a misery in Korea. There was a misery in Thailand. But look, the three countries which were not even scratched from that crisis, which was a very, very severe crisis for Asia, were China, India, and Pakistan. And that time, there was no reforms, right? But despite that, there were the firewalls around the banking system. And those firewalls still exist today. Secondly, they have been reinforced by another factor, which is the sound banking reforms. If you read today's report by World Bank on global financial crisis in South Asia, they say that stress tests on Pakistan's banking sector show clearly that Pakistan's banks can withstand and are highly resilient to these shocks. This is not said for any other country except for Pakistan. Pardon me? Oh, we have to.
Hello. This is Ali Hussain from KSB Fund. My question is to Dr. Ishrat. I was wondering if China could spare itself from this whole meltdown, because China is the factory of the world and the West is the consumer. If the consumer is slowing down his consumption, well, who does it sell to? The factory production, where does it go? Unless they have sufficient domestic demand. Okay, they have enough current account surpluses and reserves, but don't you think that their GDP growth is going to slow down from 9 to 10 to 4 to 5? Because they themselves do not consume that much as the Westerners were doing so. And secondly, about the regulation, why do you think there is a lack of regulation in case of non-banking institutions, non-commercial banking institutions, like investment banks, NBFCs, or any other such companies? Is it the political will, or is it systematic? Sorry? No, here, because right now I totally agree with you that our commercial banks are very resilient and they have the capacity, but similar confidence cannot be marketed or cannot be communicated to the public by other NBFCs because the regulator is different. So why do you think the situation is like this? Thank you.
Let me take your second question first. The financial sector assets are predominantly in the hands of the commercial banks in Pakistan. The NBFCs do not account for even 5% of the total assets. So any systemic risk to the financial sector has to arise from the commercial banks. You can't take a tiny little portion, which is mutual funds, which is insurance companies, the investment banks, the leasing companies, the mudarbas, and they are not all correlated as far as the risk profile is concerned. Every one of them has a different risk profile. So the shock to the system coming from any one of these components is even muted because of the dispersion of the institutions. There are more than 150 institutions in the non-bank financial sector as compared to 38 or 40, I lose account, in commercial banks. So there is more concentration of the financial institutions and the risk profile as compared to the non-bank where it is highly dispersed. So any shock of systemic risk cannot arise from the non-bank financial systems. Now, mutual funds have problems of their own, but that's linked to the capital markets. It has nothing to do with the banking system or the financial system. Now, coming to your first question, which was about decline in the consumption in China. I wish Chinese are able to save less and consume more. Their saving rate is 50% of their GDP, and their investment rate is 45%. So what are they doing? The current account balance is a mirror image of the difference between savings and investment. So they are transmitting or sending their excess savings to the United States and to Europe. What they should be doing, they should be saving less and consuming more and investing at the same time. Because the per capita income of China, despite quadrupling of their incomes, is only $2,000. There are still 100 million Chinese who are living below the poverty line. The Western China is still a different country as compared to the coastal China. So there is a lot which needs to be done in China, and I wish China can consume more. So I'm not really worried about the diversion of consumption from the West to Chinese. The second point I would like to submit to you is that unlike other countries, China has a complete competency on the value chain. They create high-end, technologically sophisticated equipment and also the low end. This is the only country in the world where the transition has taken place within the same value chain. And there is a scope, therefore, that you should migrate from the lower chain and let the other countries like India, Pakistan, Bangladesh, Sri Lanka take over the low end of the manufacturing spectrum so we can also grow, and they concentrate on the medium and the long end of the value chain. So that will be good for us if China withdraws from that particular segment of the market.
Mustafa Lagdawala. My question is that it is now almost a week since the State Bank announced their relief measures, but we are not seeing real liquidity coming into the interbank market. Can you please elaborate a little on that?
I hear it differently. I hear from the banks that there is a liquidity. There is a risk aversion on the part of some of the banks who are holding the liquidity because they are scared as to tomorrow the rumor mongers in this country get ascendancy and the depositors come for redemption of their deposits. What will they do? So they are withholding that because of the risk aversion. But as far as I'm concerned, there is a plenty of liquid assets, and the central bank has also given direction that the ADR should be declining to 70. So that will release more liquidity into the system.
Okay, I think now we will request
Bismillah ar-Rahman ar-Rahim. Thank you, Mahmood Razak, for inviting me. It's an honor and privilege to share this platform with Legend Dr. Ishrat Hussain. Insurance premiums range between 1 per thousand and 1%. So I'm sharing this platform to the extent of 1% only. President Shah, when he came in this evening, he said that I'm going to speak about AIG. And I said, yes, I'm going to do that. And on that I have written because I'm an ex-AIG person. And, but before I do that, I'm going to show you some slides to build the case on AIG. So the root cause, which I studied in a number of studies, and the conclusion that most of the economists and financial experts had drawn is that it goes back to 2003 when the Fed, led by Alan Greenspan, had lowered the interest rate to 1%. And the banks obviously could not sustain this rate, and they got involved into the derivatives backed by the credit default insurance, and exporting those derivatives, securities in the international market. This is one of the comprehensive study that I saw was of Wharton School of Management. And it showed that from 2003, where the mortgage ratio was 8% of the total lending, in 2005 it went as high as 22%. And these subprimes, as against the normal mortgage, had the 30 years of lifespan, but the rates were adjustable. And it made it difficult for borrowers to pay when the rates went up. The mortgage-backed securities, which we call it, these are the loans which were bundled into mortgage-backed securities, thereby creating a series of bonds, passing the principal and in the interest to the borrowers. But then many of these lenders bought credit insurance from institutions such as AIG, besides sharing a part of this on their net account. And the investors around the world were eager to buy these securities, which offered very high yield and yet insured by a company having assets of $1 trillion worth. Now, the subprime estimates, which was revealed recently by the Fed chairman, from 240 billion in 2003 to 2 trillion in 2007. And he says that we have a total residential housing stock at 20 trillion US dollars, and the residential market is of 11 trillion. And then out of that, the two state-owned enterprise now taken over by the government had 1.5 trillion, and then 9.5 was in the various sectors, and Dr. Ishrat Hussain did talk about the different ratings of these bonds and the securities. But that's where the chart is: 2 trillion, 1.5, 3, and 4.5. The subprime, as you can see, stands at $2 trillion. And this was the chart which was presented to the Congress by the Fed chairman. And here is the analysis produced by the Federal Reserve Bank of Dallas. And according to the senior policy advisor, the investors and the lenders, they did realize the impact of the easing or soft credit lending, and according to them, the delinquency rate for 6-month-old subprime underwritten in 2006 were far higher than those of the same age originated in 2004. And as a result, the single-family homes sale, which was at the peak in 2005, in September 7, it came as low as January 1998, because the lending was tightened. And as Dr. Ishrat Hussain talked about 2007, and this is also was in the Bank of Dallas Reserve Bank's report, that the paralysis occurred on 14th of August 2007, when 3 of the investment banks halted the resumptions because they could not reasonably calculate the prices at which their shares could be valued. And this then shook the Wall Street, and the triggers took place, and it took almost a year on September 16th when the entire market collapsed. Now, there are four parties. Generally, people talk about borrowers or lenders or regulators, but here I'm going to show it to you that why insurance was the key to this whole crisis. And these are the four parties. And we see that there is an element of greed between the first two, the borrowers who wants to overstretch and the lender who wants to, without looking at the document, wants to sign up for a higher rate of return. But insurance, in my view, insurer has to be very prudent. And this is where the AIG and some of the insurance companies failed. And they did not have right type of risk management controls. And we talk of the regulator. Dr. Saab said about the commercial banks, where there's over-regulation. But in insurance, we noticed that for groups such as AIG, it was under-regulation. Though there were 50 states, but group was operating out of New York, and it was not really well-regulated. I had joined AIG in 1979, and I worked there for about 4 years. And I was responsible for making filings to the 50 states of the 6 companies which were part of the group. And at that time, it was pretty tight system, and the group actuary had the full power to even veto any of the president of the subsidiary. And all the asset tests were conducted before even going for the filing. But at the same time, Hank Greenberg, which I suppose many of you must have read about him, he had the desire to make the AIG as a global empire. And it was back in 1980 that he started the 4 key divisions, which we all hear these days: political risk insurance, the directors and officers liability, or kidnap and ransom, or product guarantee. These were the innovations in 1980. And I remember that for Ingersoll nationalization in Russia, AIG was the first one to pay a claim of $5 million. And now, if we see that in in 2000, mid-2000, where AIG stands. 4 decades of establishment, United States in 1967, and roots are in China, where the company was formed as CV Star, and then it migrated to China. It has got 245 subsidiaries and presence in 130 countries, 116,000 employees, 700 agents, and 74 million customers. It was the giant, world giant. And here I can tell you that AIG had a number of professional directors on the board, and also global directors, and people such as former Prime Minister Moin Qureshi were also on the board of AIG in the emerging market division. 2 of my guests are here, and Shamim Ahmed Khan Sahab, the Secretary of Commerce at that time, would also remember what happened, and Mr. Bhutto, that AIG, Alico was nationalized in Pakistan. You know that in 1973. And since then, AIG struggled to get back to Pakistan. And in 1982, Hank Greenberg hosted President Ziaul Haq to the AIG, and there was a dinner. And followed by that, the AIG, Alico president came to Pakistan. The question at that dinner was raised that we were nationalized and we are eager to come back in Pakistan. And apparently, President Ziaul Haq said that by all means, you're most welcome. So this gentleman who is the president of Alico, he came to me. I was in Pakistan Insurance Corporation as executive director. And he said that, look, I'm here for a very short visit. I was asked to come in, and I went to Ministry of Commerce, and I'm here in Karachi. But there's one question which is puzzling my mind, and perhaps you can find out the reason for it, for the answer for this. And he said that there was a gentleman in Ministry of Commerce, he asked me that when our president said to you that you're most welcome, was he wearing glasses or not? And he said that to him, I said, to my recollection, I told him that no, he was not wearing glasses. So I picked up the telephone and called the joint secretary, and I said, भाई मुझे बताओ माजरा क्या है इसका? So he says, यार तुमको मालूम नहीं है? वो प्रेसिडेंट के साथ 2 लोग होते थे, तो उसमें जो है वो उनके जो ले जाने वाले थे उनको मीटिंग्स के अंदर, पाकिस्तान एम्बेसी के, उनको हिदायत थी कि अगर कोई सीरियस मैटर है तो वो ग्लास रेज करेंगे, और जब वो ग्लास रेज होगा तो प्रेसिडेंट जो है वो चश्मा पहनेंगे, और इसके बाद नोटिंग होगी. सो प्रेसिडेंट, वो ग्लास रेज नहीं हुआ, प्रेसिडेंट साहब ने चश्मा नहीं पहना और नोट्स भी नहीं लिए गए. सो ही, I told him that, look, there are no notes in the file. So President said this, and this is gone. But then when he went to see Ghulam Ishaq Khan, he said that, look, we paid you $3.5 million in compensation for nationalization. And this was the only compensation that we paid. So there is no grudge for you that we nationalized. We paid you, and whenever we open the sector, we will allow you to come in. But former Prime Minister Moin Qureshi was at the helms of affairs of the country, and AIG got the license. So maybe Hank Greenberg had in his hindsight the people who matter, because he had the former Prime Minister of Thailand and some other on the board. If you're interested, I'll show you the list. But this is how the AIG operated. Now AIG in subprime business. AIG was heavily engaged in aircraft leasing, mortgage finance, credit insurance, and vast scale of asset management. It was getting bigger and bigger, but then it deviated from the profit center approach on which it was founded. Now this is the 2007 report where the CEO, Martin Sullivan, he said that we must discipline in our underwriting, refusing to chase rates down in softening markets. This was a call which was too late. They had already underwritten substantial amount of subprime business, and generally you find that 50% of the business is reinsured for big companies maybe. For smaller companies it could be only 90% is reinsured. But AIG wrote this business at a premium of 0.2%, this credit business. So they could only reinsure 17% of the business. And they had a very aggressive underwriting, accumulation of risk as opposed to sound reinsurance strategy. This is where the AIG's general insurance premium stood. Domestic brokerage was producing 51% of 51.3, foreign general 27, personal lines 10, and then AIG also had a transatlantic reinsurance company, a reinsurance within the group, reinsuring group's business and outside business too. That's an accumulation of risks. And then mortgage guarantee is simply 2.4% of the AIG's portfolio. But my next slide tell you what's the exposure that AIG is carrying. Now this is what De Sullivan was saying in 2007 report, that we do have these credit swaps on our portfolio, but we are trying to diversify our business and complement our core insurance operations. In 2007, the group recorded a financial operating loss of $9.52 billion due to unrealized market valuation losses in the credit swap. And this is the last one here. You can see that he made those statements, but on 30th of June of 2008, I picked it up from one of the filing of the US regulatory filing of AIG. AIG, as against the premium of $1.4 billion, was carrying an exposure of $441 billion. And this comes to about 0.2% of the premium rate, which generally is very, very low. And this business was underwritten by them through a United Guarantee Corporation, a wholly owned subsidiary, and thereafter about 18 other subsidiaries in USA, Mexico, Canada, Hong Kong, Israel, Ireland, and Italy. And in 2007 report, they did say that our mortgage business has a very high degree of correlation to the US housing industry, which is experiencing significant home price deterioration. But they did not stop there. And they thought that we are going to diversify and get into other credit businesses. And you know, AIG had entered in 2006 in India with Tata, and then they got a license also in India to do this business. Luckily, they had not started the credit insurance in India and Korea yet. They were just at the licensing stage in that area. So CNBC's expert on 16th of September 2008, and this was a live interview on CNBC, and Hank Greenberg, who was the CEO, but he was, my next slide will show you what happened to him. But then she asked him, and he said that risk management controls either disappeared or were weakened. There was not attention being paid to the accumulation of risk, a point where they carried $441 billion of exposure, and there was a determination to grow without the right controls in the financial sector of the business. Now, this has started happening when Greenberg was around. And he says that it's a tragedy. And then now, how to get out, he said that we should be selling the airline leasing company and the transatlantic re and the asset management businesses because they don't belong to AIG. Whereas in the first stage, they should not have perhaps got into the reinsurance business because reinsurance need to be outside the group where they have to spread the risk. So why did the regulators not pay the attention? This is the next couple of slides are going to tell you more about it. AIG in 2005 had received notices from state and federal regulators for misreporting. And at that time, its share price went down by 22%, and the rating was downgraded. And in 2004, it paid $126 million in fines to SEC and Justice Department. Then the board got worried because the investigators were appointed by the SEC and the states, and then boards asked Hank Greenberg to depart, and they decided to separate the role of the CEO and the chairman, and that happened in 2005. But then, you know, Greenberg was very famous with quite a few senators because he used to dole out money for all these campaigns. And AIG's annual report will show you that they had a budget of about, $25 billion for giving away to these campaigns and other issues. So even he gave about $40 million to one of the board members for renovation of the Natural History Museum, and clear conflict of interest. But then this is being revealed now. This is October 8th, 2008. The chairman of the Government Oversight Committee, he said that there was a letter sent to AIG in March by the regulators for corporate oversights of AIG's financial products. And now the PricewaterhouseCoopers told this committee that they did not get enough access to AIG's risky financial ventures. And the root cause of the AIG's problem was the risk control groups did not have appropriate access to financial products division. So there was a clear violation of the insurance ethics and the rules. And then as I said earlier, the role of the regulators in the commercial banks, it could be over-regulated, but in insurance, in 1979 or even early 80s, things were different. But then when the group got too big, 245 companies and operations worldwide and writing very, very different and typical and innovative insurances, it was beyond the 50 states to understand the complexities of the AIG's annual report. And this is what the FSA chairman, former chairman, did say, that as opposed to what is happening in UK and Canada, the AIG system for a group were quite weak. And states were very happy because AIG was writing every year 15 to 20% growth, and they were getting annual fees, so they did not get into this investigation. And it's in 2005 that AIG accepted the improper accounting into the two reinsurance transactions of General Re, which were outside the books of $1.7 billion. Now, you must have heard on the TV that before even the $700 billion bailout package or $85 billion package by the Fed, the governor of the New York offered $20 billion out of its own assets to AIG, which was not taken anyway. That AIG as a group was controlled by the New York State. And 2005 and 4 were the years where they could have said that, look, they should have told the board to clear this mess. And all these fines were being imposed. And they could have gone and perhaps detected all this credit insurance and the swaps and everything which was building in AIGs. So why AIG was bailed out? The next question. $441 billion, I said this, but then there are other mortgages, so combined it could be about 500 billion exposure in general and in credit insurance. And then AIG is writing these kinds of businesses all over the world, which, in America, when you talk of hurricanes, and in aviation, AIG perhaps has got a lead in 25 aviation fleets. And by the way, not many of you will know that PIA is also being led by AIG. So AIG is everywhere. In all the airlines of the world, you will find that AIG has got a piece. And if the Fed or the US government had allowed AIG to collapse, the crisis would have gone to so many countries. And then foreign general insurance business of the AIG, $19.8 billion, and writing all kinds of businesses, energy, and Asad Ali Shah will be happy to hear that the AIG was also writing coal energy, and I hope we are not going to give a third.
I actually received an offer. One of the people who were given concession, just before this happened, brought a letter from AIG that they are interested in Tharkol.
Okay. So property, energy, marine, accident and health, and especially lines, and then they had seats in Lloyd's and all kinds of different businesses. And you know that people queued up in Singapore outside AIA office, American International Agency, and they were not concerned how much money they are going to get off redemption of their life insurance and annuities. Some were getting even 50%, but they wanted to get out. And I mean, here we see a different story anyway, but people were in panic and they wanted to just knock unless the Fed came in and they said that there was a calm on that. So $67.5 billion just in 2007 for life insurance overseas in AIG. And then AIG's was very much cash rich in a way that it had got 862 billion worth of assets, but then the reserves, which in insurance companies, most of you have audited the insurance companies, and you look at the reserves. So AIG's reserves were to the extent of $56 billion. And here you have an exposure of 453 only in credit insurance. So there was no comparison of keeping an eye on the free reserves and then underwriting businesses. So exposures, as I said, was in $1 trillion. So if AIG was, why AIG was bailed out? If it had not, the losses would have been huge. Export of this crisis to 100 countries, including China, where AIG has a major presence and enjoying market share of about 50% and loss of employment. So AIG had to be bailed out. And it was not Lehman Brothers or others. And then top of that now, you will be interested to see this, that this is the age now of directors and officers liability. And not only AIG, but many companies have underwritten this business. D&O, fiduciary liability insurance, financial institution bond insurance coverage, and auditors and rating agencies are likely to face multiple lawsuits for poor audit rating standards and the law firms for weak legal advice on mortgage-backed securities and bond wordings. And many of these firms have carried insurances. So if they are sued, they will go and file claims on insurance companies. And the American Bar Association just only last week gave a publication and said that 300 lawsuits have till date been filed. And most of this will end up in insurance companies, with insurance companies. And AIG certainly is a leader, but in this case there are many others who are leading the insurance. Now this is only development last week which took place, and the city of San Francisco has accused 5 municipal bond insurers, Embark, MBIA, XL Capital, Financial Guarantee Insurance, and CIFG. These all 5 are based in New York, and they are being accused that they were involved in the subprime business, and yet they underwrote this business and they gave high ratings so that we got more money and we invested into the subprime business. So now the value of their bonds is going down and down, and they're having massive losses. And this is something which is also happened about 2 weeks ago with the Los Angeles municipal authorities. But the value of these bonds of the San Francisco, I read somewhere, is $3 billion. Now the 3 credit agencies in its lawsuit, this is a very strong point for San Francisco authorities, municipal authorities, that the rating agencies have accepted that yes, there were flaws in our systems, and we are now making changes. So this is also one of their case. And for San Francisco, they could not go and sue the credit agencies because the federal law shields the agencies from liability, said the Attorney General. So they could not do that, otherwise they'll go and they do that. So this is the case as far as insurance is concerned. And before I give you a bit of a 10 minutes of lighter story on this, which I have developed on the subprime, I can just simply talk about the Pakistan perspective with regards to insurance and what will happen. Pakistan, by and large, depends upon reinsurance. And the two reinsurance companies which write substantial amount of business are the Munich Re and the Swiss Re. We may not be affected by this crisis to the greater extent, but we have our own problems.